It's Tuesday, August 11th, 2026. You're listening to the DX Today AI Daily Brief. Today, Nvidia pulls 6 of Wall Street's largest firms into a financing structure aimed at over $500 billion for artificial intelligence infrastructure. Meta open sources a model built to run on your laptop rather than in a data center. And a Bitcoin miner in Texas signs a 20-year lease that tells you exactly where compute is going next. Let's get into it.
Nvidia has pulled Wall Street directly into the artificial intelligence build-out. The company announced strategic partnerships with Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR to establish independent compute financing platforms, structured to mobilize over $500 billion of third-party capital. The money is aimed at what Nvidia calls AI factories, the large-scale data center campuses that house its chips. The structure matters more than the headline number. Rather than Nvidia carrying that construction on its own balance sheet, these platforms turn AI compute into something closer to a conventional infrastructure asset class, the way toll roads and power plants are financed. Nvidia shares fell on the news, a signal that investors are still weighing how much of this build-out is demand and how much is engineering.
From silicon to your laptop.
Meta has released Muse Glimmer, a 30 billion parameter model, and open-sourced the weights under a permissive Apache license. Meta Superintelligence Labs describes it as an agentic model small enough to run on a Mac or a PC with a single consumer graphics card. That is the whole argument. Rather than routing every request to a data center, Glimmer is built to run multi-step tasks and coding work locally on hardware people already own. Mark Zuckerberg paired the release with a manifesto pressing for fewer restrictions on open-weight AI in the United States, framing concentrated control of the technology as the greater risk. It is Meta's second attempt to reset a strategy that has struggled, and the first that puts real capability in users' hands rather than in a subscription.
Compute needs power. Texas has it.
Riot Platforms, a Bitcoin miner, disclosed a 20-year data center lease with what its own press release calls a leading frontier AI lab. Bloomberg reported the tenant is Anthropic. The contract covers 191 megawatts of critical capacity at Riot's Rockdale campus in Texas, running through June of 2048, and Riot expects it to generate approximately $9.1 billion over the initial term. With 2 5-year extension options, the company puts the total potential value at approximately $16.1 billion. Riot has now contracted 241 megawatts across 2 tenants, the other being AMD. The pattern is worth noting. Bitcoin miners spent a decade securing cheap power at scale, and that power is now the scarcest input in artificial intelligence.
Meanwhile, in San Francisco,
OpenAI has completed an employee share sale, and Bloomberg and CNBC reported the size at roughly $7 billion. The valuation is stated on OpenAI's own site at $852 billion, unchanged from its most recent funding round. What makes this one unusual is who bought. Reporting indicates OpenAI used its own cash rather than bringing in outside investors, a departure from the standard tender offer, where new backers buy staff equity and the valuation resets upward. Buying its own shares back does 2 things at once. It gives long-tenured employees liquidity without diluting anyone, and it tightens the shareholder register ahead of what several outlets now describe as preparation for a public offering. OpenAI has not confirmed a listing timeline.
every buyer wants an alternative.
The information reported that Microsoft is planning a major production increase for its own AI silicon in talks with TSMC to secure capacity for more than 300,000 of its next-generation Maia chips for delivery in 2027. Microsoft has not published that figure, and it is worth saying the company pushed back on it. The general manager of Azure Maia told Reuters, "The 300,000 number does not reflect the actual scale of the program," without offering a different one. Either way, the direction is clear. Every hyperscaler buying Nvidia at volume is simultaneously building an escape route from it, and Microsoft's homegrown effort, slow to start, appears to be finding its footing. The pressure here is less about performance than about who sets the price.
Now to the foundry floor.
Taiwan Semiconductor reported July revenue, and Bloomberg and CNBC put the increase at about 44.7% year-over-year, a monthly record. Taiwan Semiconductor manufactures the leading-edge chips for Nvidia, Apple, and most of the artificial intelligence industry, which makes its monthly disclosure one of the few near real-time reads on whether this build-out is actually consuming silicon or merely ordering it. Growth of 44% against a base that was already elevated a year ago suggests consumption rather than stockpiling. For anyone trying to separate AI spending announcements from AI spending, the foundry's monthly figure remains the least rhetorical number in the sector. It is also the one least affected by anybody's narrative.
From supply chains to state houses.
South Australia has announced a royal commission into artificial intelligence. Premier Peter Malinauskas framed it as a nation-first inquiry, and a royal commission is not a symbolic gesture in the Australian system. It is the country's most powerful form of public inquiry, with authority to compel witnesses and demand documents. The announced scope covers artificial intelligence and its effects on work, on children and education, and on the integrity of information. What makes it notable is the level of government. AI policy has been treated almost everywhere as a national or supranational question, handled in Washington, Brussels, and Beijing. A state government convening a compulsory inquiry is a different move, and the state opposition has already questioned the cost. Its findings will carry evidence that federal regulators do not currently have.
Another government, another approach.
California has taken its own step. Governor Gavin Newsom announced a new AI cyber defense program to protect the state's critical infrastructure, run through the California Cybersecurity Integration Center. The framing is defensive rather than regulatory, which is the interesting part. Most state-level artificial intelligence action in the United States has been about constraining what AI-ing companies may do. This is about using the technology to protect water systems, the power grid, and state networks against attacks that are themselves increasingly automated. California is home to the majority of the frontier labs, which gives the announcement a second dimension. The state that stands to gain the most economically from artificial intelligence is also, by geography, the one with the most exposed infrastructure if the tooling turns.
Defense technology, next.
Cambridge Aerospace, a British air defence startup, has raised $300 million. Axios reported the round, and Bloomberg reported it values the company at $3.4 billion, backed by investors who previously funded Anduril. The company builds low-cost, AI-guided drone interceptors, and the strategic logic is arithmetic. Attack drones now cost a few $1,000s each. The missiles traditionally used to shoot them down cost hundreds of thousands. No air defense budget survives that exchange rate for long, which is why the interceptor category has become one of the most heavily funded corners of European defense technology. Cambridge Aerospace says the money goes toward a factory. Whether it can actually match production rates on the other side is the open question, and it is a manufacturing question, not a software one.
Offense and defense in code.
A new artificial intelligence lab has launched with $60 million in seed funding. Corma describes itself as the first frontier AI lab built specifically for defensive cybersecurity, and the round is led by Sequoia Capital, alongside Khosla Ventures and Coatu. $60 million is a large seed by any standard, and the thesis behind it is straightforward. The same models that write working code write working exploits, and the offensive side of that equation has been compounding faster than the defensive side. Corma's argument is that defense now requires a purpose-built frontier model rather than a security product with a model attached to it. That is an expensive bet on a claim not yet demonstrated at scale, which is roughly the definition of a frontier lab.
From cybersecurity to pharmaceuticals.
Novo Nordisk has selected Amazon Web Services as a strategic partner to accelerate drug discovery with artificial intelligence, including an AI co-innovation hub in London. Novo Nordisk is the maker of Ozempic and Wegovy, and it is under real pressure, having lost significant ground in the obesity drug market it effectively created. The partnership points at the earliest stage of the pipeline, molecule discovery and target identification, where the argument for machine learning is strongest and the timelines are longest. That gap is the thing to watch. AI drug discoverer deals are announced with considerable confidence and validated on a decade-long clock. What is measurable today is the commitment. What is not measurable for years is whether any compound comes out the other end.
And finally, to Shanghai.
Unitree has opened subscriptions for its initial public offering in Shanghai and will become China's first publicly listed humanoid robot company. The Shanghai Stock Exchange puts expected gross proceeds at about 6.1 billion yuan. Unitree's machines are the ones most people have actually seen, the back-flipping quadrupeds and the humanoids that go repeatedly viral, and the listing gives the whole sector its first genuine public market price. Until now, humanoid robotics has been valued privately, which is to say optimistically, by investors with every incentive to agree with one another. A listed comparable changes that. Every private robotics company raising at a number nobody can check now has a number somebody can check, and it will be printed every trading day.
That's your briefing for Tuesday, August 11th, 2026. For DX Today, stay curious.